Hi, everybody, and welcome back to the Market Mamas podcast. I'm Becky, this is Kendra, and we are day traders who are in the first few years of our trading career where we are still dealing with the psychological hurdles that, let's be honest, can be really hard. They can really derail you and show you levels of failure that you didn't realize that you could have to deal with as a human and keep getting back up day after day. And so as we have grown through all of the ups and downs of the first couple of years of day trading, we decided to talk openly with you guys in this podcast so that we can kind of normalize those experiences and maybe, find a couple people out there that need to hear the things that we talk about. And so today's episode is going to really feed right into that because we're going to talk about reasonable expectations and unreasonable expectations, mostly focusing on day trading because that's where we have it in our faces every day and have really learned these lessons the hard way. And now at least are more prepared to understand what is a normal thing to have to deal with and what we just have to adjust and choose to look past or grow through.
Yeah, 100%. I'm so excited we're discussing this topic today because the reality of day trading is so different than what people think that we thought. And so these realistic expectations versus unrealistic expectations, it's also an evolving thing too, right? Because even now to this day, over 3 years in, we still battle this, what's realistic for us to expect versus what's ends up messing us up because we're expecting what's just not feasible or reasonable for where we're at in our journey. I mean, when we watch really, really advanced, highly successful traders and some of the advice they get, and sometimes I'm like, okay, we got some scaling back on these expectations to do. But to get started, let's just go in with some very ones for beginner traders, because we're hoping to not only talk to experienced traders such as us, learning traders, but also spread and promote awareness of this field, this opportunity, but also just talk about how there is a lot of stuff that is just people are misinformed about. And one of those major things are magic indicators. So there are so many studies, indicators, essentially they're these tools. They're tools that we can add to our charts when we do our analysis, and they're amazing and they're wonderful and they're beautiful. They're customizable. I know a lot of people who know how to make their own, and it's that in and of itself is a beautiful part of trading. It's part of the art, the science of it all, really. However, as valuable as they are not 100%, they're not foolproof because nothing in trading works 100% of the time. They work some of the time, but they never work all the time. And what's funny about indicators is hindsight, of course, is always 20/20. But when your data is printing them in real time, it's just so much harder, to read them, to trust them, and then to act on them.
Right. And I feel like with indicators, you have to learn too that there are certain places within the chart where they'll be reliable. And then that exact same indicator, when the price has moved a certain point or it's a different time of day, it gives you false information. And so you just also have to just give it time with indicators, because as you figure them out, you'll learn where their value lies, and I think there is no gold standard for multiple reasons, but also within the day, it can change. One of them can be highly reliable in certain circumstances when it could fit with the situation, but then otherwise not be. So that just comes with time where you learn what works and what doesn't. It's part of the reason why it does take years to actually really get good at this. And part of that is just the same is you can't get lost in trying to figure out what strategy you want to use, because there's multiple strategies out there, and you want to not get analysis paralysis and not get stuck on, I need to find the right one. And I tried this guy's thing for a month and it didn't work at all. And so I'm going to try this other guy's thing for the next month. And maybe he knows what he's doing. To be fair to those guys and to yourself, that's not a super enough of a data point to really know what works and what doesn't, to be honest. What I feel like has helped me the most after I got the fundamental knowledge of the big picture of all of it is to stick to building an edge within what I thought worked for me best, and then really work on it. So trade that, ask your instructors and your mentors, ask your teammates from your locker room, talk to people and study it and back test it for at least a couple of months. And then you can start to figure out what works for you. I mean, there has never been a time in history, really, where there were more trading edge styles and strategies available to study and learn. I mean, there's a wealth of knowledge at our fingertips and a guru or two for all of it. And so it's kind of an awesome part of trading. And it's very cool that there is so many different ways that we can participate with this market, but they're not all going to be successful strategies for you. It can be really easy to initially get discouraged as a young trader and think that the answer is a new style, a new type of trading, a new mentor. But you have to give yourself enough time to first have a large enough pool of data to prove if your edge is profitable or not. And then secondly, you have to give yourself time to mature into your trading process and the psychology to even effectively run your trading system and know what's what. There are extremely basic trading strategies to very complex styles of trading that factor in multiple different things. And they can both become very successful depending on your personality and how you see the market and how you want to use them if you build them with the right foundation, learning the basics all across the board. And then you start to see something work for you, and then you dial in, you dig in, you give it time to study it and fine tune it. And that's how you really know whether you can get rid of it and move on, or if it is the thing that works for you and you can keep working on it. But there's just going to be hundreds of opportunities to learn. So check it out, but then also spend the time.
Mm-hmm. Yeah, it can be really overwhelming how many different directions you can go or be led. And it's really, you have to put in the time to build that foundation, which is not a sexy time. We've talked before in another episode about how a building's foundation, it is not sexy. Like, no one cares about that. Like, people only care about when it's pretty and and what's in it. Like, what is this building for? What is it used for? What can we get from it? So that foundation period is lengthy and it's challenging. And it's just a constant investment. It's a constant investment. And having those expectations is just a huge part for your growth, because the foundation is also going to be a lot of pain. It's going to be a period of pain, and that will be your greatest factor for your growth. This is a refinement process, and it hurts, and the lessons sting, and it really takes time to accept and endure that reality of trading. It's certainly not represented enough in most mainstream trading content. And it's really hard to talk about. Even for Becky and I, whose main aim was to normalize this to be a safe space, it's still really hard to talk about the pain days, the lesson days, the days when we just disappoint ourselves and have to just put in another brick in the foundation. It's not at all easy. It's extremely uncomfortable. And that's just the reality of it. So the reality of it all is that it takes the pain to you got to get through it, and then you got to grow through it, and then it's just not something that's talked about enough in trading programs, because if it was honestly, and if it was really shown and depicted in what it really is like, few people would probably follow through, and that's just the truth. I mean, it's like once you get in it and you've learned enough and you've dedicated yourself enough, you get married to it. But if you could see how challenging it really is, like without having grown the love for it and the skill set and just the ability to endure this type of pain, I mean, it's not it's not pretty. It's not a pretty picture. Like, it's really, really hard. And that is a big expectation that needs to be understood. Expect it to be very, very painful and very, very hard for many, many years.
Yeah. And I think that humans in general are educated and taught to shy from pain. Like, if it hurts, don't do it, because it's going to hurt more. You do it again, you're going to hurt yourself again, like dumbass. But in trading, you have to develop a stronger backbone for it. Honestly, like it's a required part of getting to the promised land at the end where you're profitable. You have to be able to be taken down to your knees and get back up again many times, and then all of those painful lessons make you stronger. And this is one part of your world where taking the pain is for your benefit, and you got to find a way to like manage it and work through it, because that is what builds you stronger. And so that you would think it's unrealistic to have to endure pain to be successful, and that's true in a lot of parts of the world and parts of our lives, but not in trading. It's kind of the opposite. In order to really actually achieve successful profitability, you have to expect the pain. That's part of it. So that's kind of like a mind F there. So,
Yeah.
and
Yeah.
then emotions too, right? Like you have to think about your emotions differently with trading, because that has been like a really something that I didn't think I had to be excellent at managing my emotions in order to be a good trader. I thought you just had to learn the technicals and figure out what the price action means. And then when you see signal, you buy, sell. Well, that's what AI is. That's what automated trading is. There's scripts for that. That's not what Kendra and I do. So we have to manage ourselves instead. And only experienced traders will really understand the value of being really in tune with your emotions as you are trading, so you can identify greed and fear that could come in very fast. Like those can slip into your trading plan in an instant without your permission, and they will change the way you manage your trade very quickly if you let them. So, I mean, it is discussed, and you will find advice in all the trading books about how to manage these emotions. But it's actually really tricky, especially in the fast-paced world of day trading, intraday trading at market open. You have seconds to make decisions, and different people will go in different directions. Different people will lean towards fear as their bigger emotion that holds them back, and others will be greedy and they will want to take these bigger targets, and they won't accept something lower. And so that becomes their biggest like emotion to manage. But many times it's your outcome in a trading day is not really about the charts. It's more about you, who showed up that day to your trading session. Markets will always have uncertainty, and that's kind of a beauty of them. It's where our opportunity comes from, is that uncertainty and that volatility. But we have to be empowered by the certainty of how we will participate on any given day, how we are going to show up as day traders and perform our business. Part of it, also to give some points to Jermaine, is to pause right before you start your trading session and do a full body scan, a full body inventory, and figure out, are you calm and patient, well rested? You're not thinking about something that's going on in your body or your life that is pulling too much of your focus, and you're not really in tune with your trade plan. Pay attention to your emotions and what is going on in your heart and your mind before you start executing, because that moment of critical analysis, it really is so beneficial to support and serve you in your trading day. And you will be so glad that you did, because if you say, you know, I'm fine, it's fine, I know I'm super distracted and my heart's racing because this thing is coming up in a couple of hours, but right now I have time to be at my computer and trade, so I'm going to just trade. And I am a trader, so every day I should be able to get off a good trade. You should have the expectation that every day you can operate a successful trade. Well, your emotions, you need to take them seriously and pay attention to them during that day. And you don't actually have to trade every day to be a successful trader. And sometimes the best trading days is when you respect that enough to just not engage because you're not in your fullest capability.
Yeah, that is a huge reality of trading, and maturity really is getting over that expectation of I'm going to participate every day. Every day I'm going to find a trade. Every day I'm going to be profitable. And a lot of times it's a big distraction because you end up, taking trades that aren't even that great, that don't even really honor your full skill set, your full ability to understand the markets. You end up just kind of settling for, let me just find this, let me lock in these points here. And then, when you do are presented a really great opportunity, maybe you're over it because you were engaging in a trades or conditions that weren't worth your time. So that in and of itself is a big one. I don't think it's understood until you have experience how much that it is about yourself. And it's not ever the market, it's you. It's how you're choosing to participate, how you're choosing to show up, how you're choosing to control your impulses, your wants, your desires, your emotions. So that is really it's we talk about the long game, and it really just plays so well into that, because when you're really respecting the long game mentality, which again, when you find a lot of trader content, it's not about the long game. It's about, I flipped, $50,000 into like $2 million in whatever, like 2 weeks. I mean, it's like, there's these wonderful, great numbers, and yeah, it's all fabulous. And yeah, there's people who do that type of stuff, and that's great. But again, the long game mentality is not focusing on that. It's just focusing more on, what is your process? Like, what is telling me that I need to be participating in these markets? Like, what am I respecting? And so accepting that is very hard, and it's a harsh reality. And it's something that it's kind of like a next level evolution, because you realize that it's not about, you want to take quality trades, and sometimes that means slowing down and like trading less. But again, that's hard, because in most arenas of life, it's all about production, like do and work. And a lot of times with trading, sitting back and being able to withhold is where your power really is. So that's definitely, there is no get rich quick scheme or rushing of this process. All of that is completely unrealistic. And the added pressure of that, it won't be purposeful pressure. There is extreme pressure required to be a day trader, but not all of it is purposeful pressure, especially if it's being led by, just things that aren't even where you should be at in your journey. So letting your success really just be the outcome of your hard work, but your intentional efforts, just to define the factors that you need to improve upon most, especially within the building years like Becky and I are in, focusing on the process more so than the results, the daily results. That can really just keep you in an evenly killed headspace, and just really respecting the long game and respecting all the time that we've put in to build an edge, and then fully be able to use that skill, to take advantage of the great opportunities that we have.
Right. Like if you go hard and heavy in the beginning to make these massive points that you saw in one advertisement, like you're going to burn out early and be done, like long game, organic, put in the work and the success comes. Like you can't rush that. And to be honest, it's realistic to want the early years of experience. It's required to develop something as huge as being a successful financial day trader in like these super liquid, like international markets of money exchange. Like it's not a small thing that you're trying to do to make money consistently as a day trader. It's a big deal. Like when you really get into it and understand all the ins and outs of it, it's not realistic that you can be consistently profitable without putting in hours and hours of work, trading and studying and taking this career education seriously. Like the first couple of years of day trading, think of it as an education, career education, like your college, you're learning from your professors and you're executing in your practicums and you're getting feedback, which is the win or the loss. And then you're restudying on the ways that you lose so that you can pass the test on Friday, because you freaking keep bombing this one setups. And so study it so that you stop bombing it and you can get through this level of college, like it's a real career. And so it should be realistic to expect to need an education in it, is the point, like learning a business as dynamic and high stakes as trading. You're blessed to be able to be in an opportunity, like it is required to have a reasonable period of time. Some people have the mind for it and are wicked fast and can get it done in like 6 months to a year. Other people, more often, most people take a few years, 3 to 5. I feel like it's quoted a lot from successful interviews of traders that are consistent finally. That period is required, and the financial investment that goes along with it. Like college costs money, right? Like food and dorm and books and teachers and passing grades. And when you flunk, you have to go back and do it again. So there's a financial investment, and that's the market tuition. It's going to be in paying for classes, paying for your mentor, and then losing regularly. Then you lose slightly less regularly, and then you lose rarely. But all that market tuition and paying to be educated that is the price to play. That's the price to the financial freedom that we can really build for ourselves. And that is realistic for this incredible career that can take us to the moon, can build your wildest like castle on the hill, if you put in that work and you really embrace the college years of it. College is fun. Like, look at it on the fun side. Like, enjoy it. Maybe you get a little sloppy drunk after a really hard loss, preferably on a Friday, because otherwise don't trade the next morning. But it's gonna happen. So like, learn through it and it'll be worth it.
It totally is. I love that analogy with college because it's like with our trading, you got to keep showing up. Like you show up for your classes, you study, you put in the work and you get your results. And I think with trading, another very unrealistic expectation is about your early profits. So, just to circle back, consistency is everything. I mean, the goal when you're starting out is to have consistent, smaller profits, and just make that, a habit, because now you know that you're making winning choices. And that's really how you build your confidence. And it's really how you, almost like earn the right, to scale up, to, keep leveling up to the next tier. If you're rushing the process, you'll more likely just take huge hits, and then you'll feel like you're okay, 2 steps forward, like 10 steps back. Now I'm injured. Now I'm not able to, to come at the market, in the style, in the way that, I know I'll be able to set myself up for success and serve and support myself. So it's challenging because there's a lot of comparison, right? I mean, again, with whether you're part of a community and you're seeing other people's, trades and their P&L, or you're watching, more advanced, traders. Like, there's so much amazing, great content, which is awesome. And it's very informative. And I love that it spreads the awareness of trading and the amazing opportunity. But a lot of times, if you internalize that can become very dangerous. It could steal your joy regarding trading. It can make you feel like you're not doing enough. Your results aren't impressive enough. And others' outcomes are just never going to be identical to yours. The others' trades are never going to, be yours. Your strength can be someone else's weakness, and then vice versa. So trading is already complicated enough, as we know. A way to uncomplicate it, somewhat at least, is to just stay focused in your own lane and to do you. Lean into how the market speaks to you and what your strengths are. The only comparison that really should ever be taking place should be internal, and it should be used in identifying the targeted areas you need to improve. And then when you do see other traders doing well, have it be a sense of encouragement and motivation, and be happy for them, because your time's coming too.
Right. And even two people looking at the exact same market, but independently in their own homes, can take totally different trades and make similar P&Ls and both be successful. I mean, there's many days where Kendra goes long and I go short, and we both end up with a profitable day. I mean, it's beautiful, really, all of the potential opportunities out there. And I would say on the topic of comparison, I think it's also unrealistic to compare yourself to what you see in advertisements and what people will post on their social medias and on different channels, because sometimes what people post for the greater world to see is like their really pretty like profile side that they want to show, but it's not always the accurate reflection of their truest trading outcomes. I mean, it's much prettier to post a loss. Even if you are a young trader, you have experienced this. I have experienced this. I really, it's nice to post a great trade that you nailed and you're proud of, and your teammates will be like, that's awesome, you killed it, like, way to go. That feels so much better than being like, fuck this one up, like, sucks, I'm stopping, I get it, it's a hard day, I'll learn the lesson, let's talk about it later when market is closed and I can like be calmer and focus on what I need to do differently. Mm-hmm. Those are two very different experiences with posting. And so, have it in the back of your mind that if you see something from someone that you don't know, you don't necessarily need to seek their outcomes right away, or believe that that is their full situation and that is reasonable to expect if you follow them or whatnot. Because comparing to the figures in the media, you just don't have all the information, and it could be a false representation. You don't have their full objective trade execution history fully revealed to you very rarely. So just tune it out, I would say. I mean, all those comparisons are often inaccurate at best and unrealistic when you really try to compare it to your actual truths, what you maybe don't even share to anyone else. They're not going to be apples to apples generally. And so it's unfair to yourself to even try to look at them side by side. As a younger trader, that side by side comparison can be really toxic to even worry about. Like, you don't want your psychology to have to go to battle with that. Just don't even let it be a conversation in your head. It's really fine to see some excellent traders on YouTube or whatever platform, but you want to prioritize the respect for their journey and know that even if that is their truest version of their day, like, that's amazing. And you should be inspired by that. But also don't downplay the fact that they probably spent 9 years perfecting that craft. And like, in 9 years from where you are, or 7 years from where you are, like, your situation is going to look a lot different too. So you instead, like, I feel like it feels much better to prioritize the respect for all parties involved, and to not take it heavily on yourself. It may take you a long time to get to where they are in their situation. And by reframing looking at those traders' wins as a source of inspiration and possibility, like, this is amazing. Like, I made $200 and I was really excited. And then I looked and this other guy made 200K. And that seems amazing. My $200 now looks like pennies and I'm sad. No, like, $200 is still a big win, you guys. And know that when you are 7 years past and you're at their level, 200K could be your day. And that's badass, right? Like, that's amazing. So use that reframe, be proud of their outcomes, but it's not a reflection of your progress. And trust that your season is coming, and then your wins will be yours, and you'll get to share them from wherever you're at to whomever you choose to. And that's the beauty of this journey, is that it's supposed to look a little different, and we will all get there so long as we don't give up.
Yeah, I love that reframing of it, because when you see someone's amazing trade, okay, so for one, like, the results, the wins, like, that's all relative, right? I mean, it's all about the setup. It's all about the trade. And so that process of, how that trader got to be able to trade that size and put on that type of risk, I mean, that's just that's their story. So I really love that advice, Becky, because we've had to learn that the hard way, for sure. And then also realizing that, okay, that one amazing trade that they're posting, like, okay, that's part of their win rate. But, it's impossible to try to seek out a 100% win rate, even a 90% win rate. It's a little more feasible to consider 70% win rate. And having, again, those realistic expectations, so you're okay on the losing days, so you don't sweat them. You're not going to completely go crazy and revenge trade or go on tilt because you're like, I'm in a 30% day. And I mean, and it's like, we know these things, but it's very challenging in real life to accept that. So there is just the variance in the markets. And that's what's the beauty of the market, is she surprises us, and every day we need to be open for a new story. Yes, we have all of our tools and all of our knowledge and market context and trade plans that we build and intentions and levels, but at the end of the day, we have to stay open to flow with her and follow her. We go where she goes, and so that's also part of just expecting that some days your read will be completely off, and some days it just won't be your day. Some days, some weeks, it won't be your week, but you have to trust that over time you are a profitable trader. Not accepting that fact, it just really leads to forcing yourself on the market, during less than ideal trading conditions, which can result in lower confidence in your edge. And your edge was never even the problem to begin with.
Right. It's like respecting the probabilities of the game, like, there's so much variance within the way that the market moves, and so many influential factors that we don't have control over. So you have to respect the probabilities that 100% win rate is unrealistic. And so to aim for a solid 60, 70 and to honor the risk on your losing days, that is what a profitable trader's trade log looks like. So that's realistic, and that is how you can let your winners compound, and you can get paid, and you can start paying your mortgage off the wins when you can skim off the top. Like, it comes, but not at 100% win rate ever. And so I for one, like this is something I've had to deal with this last year, is like when you're on a winning streak where you've won for like 5 or 6 days in a row, and then you take a loss, you're like, no, I'm a winning trader now. I've stopped with that losing bullshit. This is not what we're doing. Take it back. And so then you can so easily, you guys, you can so easily start tilting and chasing and trying to fix it right then, because you're on a roll and you won't accept your stop loss, which you previously defined as your risk for that day. And it's a dangerous place to be. So like the best way to manage that is to know the probabilities that you have to take a losing day and to just let it be, which is really hard. It's harder to do than to say, for sure. And then, you guys, not every person you try is going to be the best on the first try. So it's unrealistic to assume that your first mentor or educator will be all that you ever need. So let's be honest. There are many, many styles and teaching methods and techniques and training programs that are offered out there. I mean, if you have searched trading one time, you're probably hit with multiple ads all the time, targeting you for a new program and a new mentor that you just have to have because he's super profitable. But let's just say that they are not all created equal, and they won't all be your person. So once you have started somewhere and you learn kind of all that person in that program really offers from as an early mentor for you, feel free, I would say, to shop around once you feel like you've gotten to a point where you're plateaued, and find something else that kind of speaks to the niche where you think you want to go, and kind of try to level up as you go, finding a method and personality that is right for you and how you learn, how you see and execute in the market. You can start fine-tuning your skill set and your edge, as well as the person you're learning from. Because if you find someone that sees it with your same lens and then they fine-tune what you're doing, that can put you on a path to elevate much quicker, because you guys are starting to speak the same language and they understand your problems just as readily, and they have encountered them themselves, and they can get you there. So you can kind of settle in with that person and really start locking in your best system. Your first might not be your best, but we're always students of the game. And so our trading, it can evolve as we develop stronger skills and we sort of identify who we are when we come to the charts and what naturally gravitates to us for wins as well as losses. You can fine tune who you're learning from as well, instead of looking for trying to understand every little thing about the market. Like for me, for example, I tried to learn footprint from a person who's very, very good at it, and I highly respect, and I just didn't enjoy it. And I didn't enjoy, Kendra likes it better than I do. It didn't speak to me as readily, and I felt like I was struggling to understand it. But then I was realizing that I'm successful with these other set of tools. And so I was like, I don't want to give any more time meddling with footprint right now, because this is helping me win more. And so I'm going to seek to understand this better. And that has propelled me to success more quickly than I think spending a lot more time on something that I didn't see as clearly.
Oh, for sure. Yeah. You have to lean into what speaks to you more, what you naturally gravitate towards. I mean, I know for me, I very much like, as soon as I learned market profile and footprint, I was like, oh, like something like just the way I see it, like just opened up for me. It was like a beautiful picture. So, we have everyone's just different. And that's, again, what's so great about trading. So yeah, you will have to kind of dabble here, dabble there, whatever, really speaks to you, whatever you feel the most confident. I mean, I was extremely not confident on learning a newer advanced style. You just got to challenge yourself, and you'll be amazed, how your world opens up for you. And we're so happy you all joined us today. I really love this topic. We'd love to keep the conversation going. Please feel free to comment. We appreciate everyone who watches these videos to the end and who does leave us comments and show us some love. Thank you so much for following us. If it's your first time watching us, please subscribe. We're dedicated to just bringing out more of ourselves, being transparent, and having the safe space to discuss this very difficult journey of day trading. So yeah, take care, everyone, and our best trading days are ahead. Bye.
Bye.